we do have an opening there to the markets, which is less than illustrious at this point in time. But look at us. We're hovering around 26,100. I mean, the dip isn't even what many were expecting. We're actually off the market lows that we were looking at pre-market. Again, we're off the back of an S&P and NASDAQ record high. Chris Gersch is here with more on the markets. He's Director of Strategy at Bell Curve Capital, and he joins us from the CME Group in Chicago. Different side of the coin there to look at in Chicago. So let me get to you with some of the data we have been seeing. I mean, the major issue here is, again, slow and steady on the Fed, and yet some people are wondering 4.2, it was revised yesterday on GDP. Where do you go with that? And some people are banking that the Fed may not even raise rates as much as they indicated in 2019.
Yes, I think that the Fed is finally hearing what they want to as far as the inflation story. I think ultimately, if you do see any pullback, I think a lot of the concerns around China, the trade war that is continuing to carry on in the news, is really a concerning factor for the Fed. And I believe ultimately, a lot of the whitewashing that you see with the ex-NAFTA agreement, with the Mexico and Canada, agreements being put in place this week, I think, the real story is on China, and I think Fed is really pointing its binoculars that way.
Yeah, and it's a good point. And while any NAFTA deal would take pressure off the manufacturers, and we might get some kind of a rally on that, would it be fair to say that a NAFTA deal is already priced in here?
I think that an NAFTA deal is already placed in here. I think it's an ego trip right now between Canada and the U.S. I think Mexico falling in line. Canada lost a lot of its leverage. I think you're just putting lipstick on a pig, really. I think it really resembles NAFTA a lot. Ultimately, though, it's just speaking to Trump's promise to end NAFTA, and therefore we have this new name.
We'll see how far they get with that, especially in Congress, because it still has some legal hoops to go through. I wanted to talk to you just about some of the data that's out this morning. Consumer confidence is still looking quite good, and yet we do still see, it seems to me, it's inexplicable slack in the labor market in the United States. I mean, what do you think when you look at the data?
When I look at the data, what I'm resoundingly seeing is that the jobs are being unfilled that are needed, such as skilled workers for housing. This is something that is echoed throughout the market. Ultimately, the job openings right now are for sophisticated workers. I think the imperialism, centralist type of situation that we're thinking about, with our politics is going to only hurt us. I think ultimately you're going to see it level off right here. And again, that's another note that the Fed's looking at as far as seeing if we get any job wage growth that is expected in the fourth quarter.
Yeah, it will be interesting to see the way all of that shakes out. Just to put you on the spot for 1 second, actually, we're just bringing up the NASDAQ right now. Tech is on a tear. Do you think that can actually continue?
I think tech's on a tear. I mean, you look at Amazon, right? They did $8 billion in total profit in the last 20 years. Apple did $327 billion, $8 billion. People are talking about $2,200 stock, cost. And just 6 months ago, we were at $1,300 forecast. 48 analysts are all saying buy Amazon at this level. Only 2 are holding out of the 50. So ultimately, I mean, if that doesn't tell you tech is red hot and, stay with the momentum, I don't know what does.
And everybody is listening to you as of now. Thanks so much, Chris. Appreciate it. Now, as Chris was just talking about, there is this anticipation that Amazon could perhaps join Apple in the $1 trillion club. Right now, the iPhone maker is America's only company worth more than $1 trillion.